Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for a pretty interesting day on this Wednesday, the 14th of May, 2025, about 5:15 p.m. I'm really early today. I have an engagement that I have to go to, and I have to dress very nicely. So my wife is beating the heck out of me, get done, and we're leaving. So that's what we're doing. To make a long story short, the data tomorrow is huge. You know, when I give you this data here, it's different than what my subscribers see because they get the estimates with all the data, and then they get reactions from me as I write further at 11:30 in the morning, and then in the evening a newsletter for them, and I review everything of what's coming up with new estimates for the morning. But here, I'd be on this forever with you. So you're going to get jobless claims, the Empire State Manufacturing Survey, Philly Fed business activity, U.S. producer price indices, advanced retail sales, all at 7:30. That's a lot of data. I think we get the Fed Chair talking tomorrow, if I'm right, too, Fed Chair Powell. We then have the Federal Reserve releasing the monthly industrial production and capacity utilization, National Association of Home Builders Market Index, a singular number. That's at 9 o'clock. And at 9 o'clock, we're going to get business inventory data. The break's at 8:15. Then you have earnings, Walmart, John Deere, Kava, I can go on and on, Alibaba. It's going to be an exceptionally active day. The president has had himself one heck of a good time. He's the best salesman Boeing's probably ever seen. He got another huge order today. He's got the Saudis with a big order. I'd like him to keep traveling. He's your Fuller Brush man. He knocks on the door and he gets the job done. And that's the interesting thing, because what's happened in the markets is interest rates are climbing. They just continue to move up. You're, I think, in the 10-year note, I'm going by memory, 4.54, and you're pushing 5% in the 30-year bond. The last time we were in the 5% range in the bonds, the markets, if you remember, were crashing. The stock market was going down. It was near April 7th, if I'm right. The dollar had let go to the downside. What's different this time? Well, what's different this time is that was an induced break by the word tariffs, and everybody got scared. The tariffs were not going to get any deals done. This is going to shut down. And the word recession, up until the past 48 hours, had been on everybody's mouth. Everybody's not talking recession now. There's even the word, instead of that, stagflation coming out. Keep that in the back of your mind, because Trump is proving he can get deals done. Tomorrow's going to be a big deal to see if it can get done. The president's hanging out in the Middle East to see if President Putin is going to go to Turkey to meet with Zelensky. If not, he'll have a delegation that goes there. If I'm Putin, I wouldn't be going. I'd be sending my delegation. If it sounds like a deal could be done, we'll meet again very shortly, and at that point, I'll be there to ink it or whatever you want to call it, if he thinks it's worth his time. Remember, he and Zelensky, from what the press says, literally hate each other. And the fact they went to war, there's probably a lot of truth. They're not good friends. So why put yourself into that? The bigger issue, if it doesn't do a deal, will the U.S. join with the EU and the U.K. and really hit the man? They're talking now 500% tariffs on any country that buys Russian oil. They're talking all tankers that carry Russian oil, taking away insurance. If they dock in a certain country, they're going to be hit in a huge manner with all kinds of fees. So they're out to shut it down, and they're letting Putin know what they're going to do. The next thing that'll happen, Iran's waiting for the date that the U.S. is willing to meet them again, and I think the U.S. is getting fed up. All that Iran says is the U.S. isn't being reasonable. We're being reasonable. Okay, you can't have a nuclear weapon. What more do you want to know? Okay, you're not good actors. What more do you want to know? I think that's being reasonable. So we will see where this all goes. But the good news, and why I was getting onto this, is the high interest rates with deals being made. We're not seeing so far that people are being laid off in the labor. We're not getting runaway inflation numbers yet from the tariffs. But remember, we're in a 90-day grace period. We don't know where this will be down the road. But markets don't look down the road. They look at what's happening right now, and that's what they react to. And the fact that the president has got NVIDIA, Cisco, all these big tech companies making a killing. Boeing going to make a killing. Everybody wants U.S. chips, and who better to sell them than the President of the United States? And he brings his group with him, and these deals are getting done. You can't argue that. You can say, oh, blah, blah, blah. The simple fact is they're getting done. The argument is there follow-through? Is the real money that gets transferred? Do these things get done? That I could accept and hope that it does happen. When we look at the E-mini S&P, it's still up 4% for the week, and this includes tonight's early trade. And you could see the support's back at 57.62. That's a long way down. So this market is acting better, and that's on a weekly chart. This is a chart, as you know, of the Fibonacci numbers. These are the percentages that they're at. I don't know if I had those up yesterday, so I just wanted to give you an idea where they're at and what the market has done. This has gotten away from the 62 percentile. I could add, on our charting service, you can add more Fibonacci percentages, but I'd have so many lines you'd get dizzy with it. The swing line has got higher lows, higher highs, bullish. The market's gotten up to, installed close to, but over the combination of the 200-day average in gray and in green, the 100-day average, bullish. It's not staying over the Bollinger Band, running into a brick wall at that number, okay? But you're embedded. So until you lose the embedded reading, this market is in a full-blown bullish mode. Get the red line under 79, a difference. Do I think the market spent a lot of energy? I do. But if you get a report from me, if you get my full research, is what I'm saying, I got a report in there as to what has happened in the past 25, 30 years. As the VIX went up over 40 and back under 20, like it's done. And there are occasions of it, and it's all been laid out, and I give the percentages of what the market does. And though I'm not sharing it with you here, my clients got that, and I think their eyes opened up. Suffice to say, still bullish in my opinion. NASDAQ, still bullish. So the big question in both the S&P and the NASDAQ is on a break. Will the 200-day and the 100 act as support for the market? That's really what the question's going to come down to. And I can't answer it. I can answer that on good breaks, the pros will buy until the red line closes under 79. That's what I teach for the momentum trade. In the Dow, you're backing down. My guess is tonight you're going to see some buying in the market. You got to be careful. I don't know how these reports will react in the morning. I don't know what the Fed Chair is going to say when he speaks. But what can he say? All he can say is, they're studying what the tariffs may or may not do. They're looking at the labor market. I can't imagine he can back away from that in any manner. He's in a rock and a hard place, and he needs more data. And so far, Trump is doing deals. In the Russell, backing off, not a buy. Again, this is the weakest of the indices. It's flirting already at 5:15 in the afternoon of losing the embedded reading, and if it does, it could easily get back to that 18-day average of closes. So caution is the right word. In the DAX, you know that I thought that we might get a break here. I told you I don't think it had a run to the Bollinger Band because it's been such a dramatic run from right here all the way up as far as it went. And now, if you open steady, you're going to lose the embedded reading in the morning. This market has to go up. And if you lose it, then I think price and the 18-day average can make a run at each other. We'll see if that happens. And by the way, I'd be wrong in my theory if you go up and make a new high at that, 42.99 level. In the 10-year notes, you just keep riding this down. And if you embed, you're going to go higher on interest rates. That's what it says. We'll see if it's there. Right now, it's just in an oversold status. 2-year notes, it's embedded. So the market that the Fed impacts the most, which is obviously from a 30-day to the 2-year, let's call it, this market, let me just show you. You can't count tonight, so let's not do that and let me get ahead of myself. But both numbers were under 20 on the close Wednesday. Day before, they're under 20, and the day before. You got your embedded reading, as I said. So good hard rallies, what do I think? I think the pros are going to sell. And what they're saying here is very simple. The Fed doesn't have the markets back right now. It's not going to stop interest rates. It has no reason to cut. It's going to let market forces do its job. That's my interpretation of it. In the dollar index, lower low, higher high. I can see it backing off. It went to the Bollinger Band. You only go over it and stay over that number 5% of the time. So when you hit it, it's like hitting a brick wall. You could stay longer than that over it, but 5% of the time. That is what the algorithm is based on. And if you do your regression analysis and go back and look at the market, you'll see, according to everything I've ever read, I didn't create this, John Bollinger did, it will do that. In the eurocurrency, lower highs, lower lows. So if the dollar's got a bid, this has a small offer. It's an oversold market, period. So it's not telling new traders to come in, hey, sell me. That when you're oversold, I don't believe that's what the market's saying. The British pound is saying, it's a weird chart. This chart is clearly bearish. The weekly is clearly bullish. You've got the two fighting each other. I hate that. Today, you don't know how often I was writing today to tell my traders to go short at the 18-day average. It was an easy sale all day. And then I kept opening the weekly chart and going, why am I doing that? Everything there is bullish. And you get torn. And I don't have the need to have to make a trade. That's not what people, my subscribers, are paying me for. They want me to put out trades that, not because I feel we have to trade. They want them based on what I'm seeing. In the Bitcoin, you can see that you're coming. Are you going to lose the embedded reading? Well, you need to close under 79 to do it. You're back up 200 points in the early trade. You were down today. Okay, we'll see. The market is still bullish till it isn't bullish. Lose the embedded reading and I'll have a different attitude. In crude, up and away, is crude going to be impacted by what goes on in Ukraine? Of course. So the first thing is oil might come off the market, all that Russian. The second thing, I'm telling you, Aramco said in weeks they can be producing another 2.5 million barrels a day, just Aramco. It doesn't make up for all the Russian oil. It's just one of them. But you do realize the reason that OPEC is increasing production is because they got a lot of members that are cheating and want to keep cheating. So if everybody did more oil, they can make up the difference of Russia's. Higher low, higher high. When we look at rebar gasoline, I am of the opinion this market has made its summer low. I'm wrong if this low's taken out again. Not the first one, the second one. Barring that, on pullbacks, given the overbought, I'd love to see if the market sets up a potential signal to come in. Natural gas. I think the market's on the verge of trying to get through here and roll over to the downside, which is typical in the summertime. So you put this all together, you come up with ideas, and let me tell you, tomorrow one of the things that I'm doing for you is I am putting together a special report. I've done all the chart work, so all I have to do is record it, which I will get done tomorrow. I'm not going to tell you what it's in, but I can tell you this already. If you're one of my subscribers paid, it's included. If you're not, and you're watching this and you're new to me and you're cut to my website, you're going to have a couple of free views of special reports. But after that, you're locked out of them until you either subscribe or you can pay for them there. Right now, you're getting any of my subscriptions, 90 days, for what? These 1/3 off prices. So that's where you're at on these. I mean, that's a pretty good deal. You can decide if you like it. And the reason we got rid of 30-day trials to me is simple. I want more time to prove myself. Anybody can get wrong for 30 days. I don't know where you come into it. Oh, I just took a loss. If they were all winners at the beginning, we see what happens. Try me 3 months. You tell me what you think at the end of that. Go to iraepstein.com. And by the way, you can quit anytime you want in these. You do it all online. You don't have to call up, oh, call me and we'll cancel. We don't do it that way. It's right online. iraepstein.com. We've got the cursor up here if you want to give it a click. On YouTube, you'll see a circle with an eye. Give that a click. It'll all take you to where you have to go. Have yourself a great evening. I'll catch up with everybody first thing in the morning. If you're a